We will respect everybody's time and start right on the button. So we've got about another minute before we get started. I'll do a little very quick rundown of the software if you happen to not be into the game yet, meaning you don't have an account yet or anything like that. It's actually a pretty awesome way to practice strategies. And one of the most exciting part of it is you can literally play game after game after game every 10 minutes. You'll see in these little boxes here, this is actually the duration of the game. So obviously at night here we're looking at some crypto games, but during the day there's multiple stock trading games. You can see up on top here as well, stocks and cryptos. But what's kind of cool is you could test your strategy for 10-minute windows. And to me, what's one of the most exciting things is that you can literally get the fill at the time that your game starts. So it really doesn't matter if the stock is up or down in the day. What it actually does is it really gives you repetition to get in there and make a lot of trades. And actually, quite honestly, is one of the biggest things, if you've ever been around me for a while, and especially, hey, Mitch, what's going on, man? If you've been around me a lot, you know that one of the secrets to actually trading on a short-term basis is using the intraday charts as nothing more than a way to confirm the longer-term order flow. And specifically, the way to do that is you drop down, and actually, you know what, I'll pull up a chart right now so we can take a look. So obviously, we're taking a look here at the SPY. I'm actually going to look at something that had a decent movement today just to make the example that I want to get across here. So you can see, obviously, we're talking about Home Depot here on the daily chart. And if we zoom out a little bit to the last few weeks, you can clearly see that Home Depot has had some nice solid bullish order flow from 191 up to about 215, 215 and a half. But here's the key. Because Battle Stocks is intraday, you can literally determine what the trend is for a particular hour, half hour, and then maximize the amount of money that you win, the coins that you win. And actually, we're going to get into that in a second as well, because these are going to be the prizes tomorrow that are going to be distributed to the winners. So essentially what happens is you have a positive P&L or place in the battle during the day. Tomorrow's going to be a 2-hour battle, and you get entered in a drawing to actually win an Amazon gift card. But the point that I want to get across here is you can see clearly Home Depot had a monster energy candlestick to the downside, a bearish energy candlestick. But what we normally end up doing, and especially for the game, if we just go right back into the game real quick, because the games start 10 minutes, 30 minutes, some games 15 minutes, some an hour, 2 hours, you can literally jump back into your charts and determine where the stock is that hour. So let's just say, for argument's sake, this hour right here was mostly red. We actually pushed down and bounced for these 2 hours in a row. And that was, what time is that? Middle of the day. That's actually the 10 to 10:30 candle. So if we drop down intraday to that candle, which this was the bounce over here, we would only be looking for entries when that hourly candle is red. So literally every hour is a new trend. But when you combine the hourly candle with the daily candle and then only use that time frame to get involved in a longer term trend in the direction of the hourly, then you're never looking for an entry signal unless those time frames are actually lined up. That's one of the biggest problems that traders have, whether it's in battle stocks or in real trading in general, is trading without a clear probability. There's no other way to word it. The higher time frames dominate, the higher time frames matter the most. And when you pick your trades only in the direction of the higher time frame, or a significant time frame where you can clearly say right now there's buying or selling going on, you have to make a decision. And in my world, I call that cash flow trading versus, actually I'm going to put that on here. Just do it over here. Okay, and actually Home Depot is a really good example to discuss that. So it's basically you're trading for cash flow or you're trading for order flow. One thing you definitely have to you work with me. My typing is horrible. So Home Depot is actually a really good example right now. Home Depot had a monster day to the downside, and active traders would have been building a monster argument, especially if they were in my office in New York City, saying, I don't understand, why can't I short it, why can't I short it? And the real answer is, well, that's because the institutions have been buying the stock for the last 3 weeks, and it's been basically in a obvious bullish uptrend. I like to say order flow because I like everybody to visualize behind the charts that there's actually buying going on. Order flow means large flow of orders creating this move from 191 up to 215.5. So that's the longer term order flow. Cash flow would be a trade decision that you make only on the shorter time frame. Now, what's interesting, it could be based on 2 candlesticks that are just well offered, and you decide to trade these stocks intraday short only for cash flow, which means you don't build a position, you don't add to a position. All you do is get in, get out, and go to the next trade. You're not trading aggressively. You're just looking for that move. So you have to make a decision as a trader, and then we combine that with the game, 10-minute games or 30-minute games, 15-minute games. You can literally always be on the right side of a trade for the duration of either the trade with real money or the duration of the game if you happen to be trading battle stocks, just by combining order flow with cash flow, which will ultimately dictate, and this is the cool part about this, your trade management. And this is really one of the biggest parts that is kind of a secret in trading. I don't know if that's the kind of right word for it, but too many traders, and I'll just put up this 15-minute chart here again, too many traders will be looking at these shorter time frames. So let's take a look here at Home Depot and see this as the end-all, be-all of everything. Now, granted, today it was a monster, awesome down day, an awesome bearish day for cash flow. And I'm gonna really drill this home before we start to get into looking at the actual charts and looking at the top 25 here. If Home Depot traded above the opening price and the stock was well bid, meaning higher highs and higher lows in the direction of the longer term order flow, those are order flow trades, and the trade management is hold those trades longer, build positions, and generally speaking, unless the whole world changes while you're in the positions, you'd be holding those trades longer. If you're trading Home Depot in what it did today, which was bearish momentum, which means only today's price action, against the higher time frame, your now trade management is cash flow only. And what does that mean? And let's go down to the shorter time frames and we'll make it very clear. 15-minute chart. That means that if you choose to trade this cash flow trade against this longer term trend, you are only looking to put the trade on and get out as soon as you start to see where the stock is slowing down or bottoming out. And then you'd look to do it again. So in this case here, you would short it, inside candle, you'd get out, look to get back in, inside candle, bottom candle, you'd get out for a half an hour and then look for another trade. The point is, when cash flow, and I'm going to go back out to the daily again, and I can't overstate this enough. If you guys don't know, my firm in the city, we actually got to the point where we were trading 500 million shares per month. That's a lot of trading. And you start to learn what works in a really big way and what doesn't work. Nobody on the planet will ever convince me about what I just showed you doesn't work. It absolutely works because there's no other way it can be. If you're trading with the big money, you can be a little bit more aggressive. So your trade management, before the trade. If you're trading against the big money, your cash flow is the trade, and your trade management is known before the trade. Too many traders go into the day saying, I'm not sure how I'm going to hold the trade. I'm not sure how long I'm going to hold the trade. I'm not sure. That's BS. That means you don't know what you're doing. You need to get the plan. You need to pay attention to what's going on. Your trade management should be decided before the day starts. Now, I know you can hear, you're going to be like, oh my gosh, but there's going to be so many days where something monstrous happens, something out of the blue. You're not trading for what happens out of the blue. You're trading for what happens most of the time, but you follow your rules all of the time. That's where traders get messed up. They get messed up on the 1 or 2 times when they follow their rules and they don't make money on the trade. I got news for you. You could make a great trade that doesn't make money. It doesn't make it a bad trade. It makes it a trade that didn't make money. Big, big difference. So the more you are focused on trade management based on order flow or cash flow, the easier it's going to be for you to determine how you should manage the trade, how aggressive you should be with position size, and how long you should hold the trade. So I hope that helps. That's a little 10-minute lesson there. What we're going to do now is we're going to jump in. I'm actually going to sort them by alphabetical order, so we're not going by anything with a bias. I just want to point out again, tomorrow's game is the game that is going to be called, if you log into the dashboard tomorrow, you're going to see on the dashboard there's going to be a game that's called Prop Trader Challenge, and it'll be a 2-hour game. So you log in. I'll just use this as an example. You click the game. You click the game to join. If you want, you can take a look at the prizes and all that kind of stuff. But you would click the game. You agree to the terms of service. And then you would go to this side here, and just for illustrative purposes, I am going to pick some crypto tonight. You would pick whatever you want it to be as far as stocks from over here. They populate over here. You would choose buy or sell, depending on whether you want it to be long or short. You would click confirm, and then that pops over to your dashboard into your upcoming game. So when this game actually starts, it'll pop over here and to get started. So that's what you're going to look for tomorrow. But getting back into the charts today, before we set up which trades and which side for tomorrow, it makes a lot of sense to see which stocks had relative strength and relative weakness compared to the market, because that's everything. It's much, much easier when all of the money in the market's on the same side and you decide to join that side. So here's the call that we had coming into the market during the day today. If you don't happen to get the daily email, just shoot me a private message here or put it in the message, and I'll make sure you get involved. False breakout a couple of days ago in the SPY where we actually bounced up, and I'm actually going to put some volume on here just so we could get some context. We actually bounced through and failed the next day, which was Friday. Both days on big volume. So we had a monster push through and a monster failure, both days on bigger volume. Generally speaking, that calls for a top. What's going to be really interesting is to see what happens tomorrow, because the market basically had all Saturday and Sunday to weigh the news or digest the news, actually a better way to put it, of how many billions of dollars are going to be included in the tariffs and blah, 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 trade wars. So we actually did, and we're going to get into the intraday charts in a second, but you can see what we had. False breakout causes doubt, which obviously we had an inside day after the solid breakout, so there's the doubt there. Led by another day, which is what I call an indecision candle or a melted candle. And just to zoom out a little bit there, that basically means the security opened and closed in basically the same spot. Why is it called indecision? Well, if it opens and closes in the same spot, you can't say anybody had a lot really to say that was that convincing that day. So retail investors get a wake-up call. Essentially what I mean by that is we've had this really nice long-term run since the beginning of July without really any vicious pullbacks at all. And we've had some kind of sideways. At the beginning of the year we had that, but we had nothing even close to that. So what I mean by wake-up call means that you have to start paying attention. If the SPY and the market, we'll take a look at the other two, some of the other major ETFs. If we start to roll over, you got to get to a point where you can't close your eyes and say it's just going to keep going up, because that's what the stock market does. Look, I don't thrash anybody's wounds or anything. You know how many people saying that about Bitcoin last year, especially if you're in Facebook groups and whatnot. Oh, Bitcoin can't go down, can't go down. Anything can go down. It doesn't matter if it's Bitcoin, the stock market. Something else you have to put in the equation now is there is a lot more news now that there hasn't been. This tariff stuff, the trade wars, it's real stuff. So I'm not saying we're going to go down. I'm not saying I hope we go down. That's far from the truth. All I'm saying is if you want to be a trader who's on top of it, know your momentum, which is cash flow, know your order flow, which is institutional activity, know the significant levels you need to trade around, know the trade management before you put the trade on, which we're going to get into how that applies on the daily charts right now. And then be careful. If the market starts to roll over and we break this 290 support here, which you can kind of see, I think we got just above it today, 290.37. So we came within 37 cents of that and actually closed in the upper end of the range. That's going to be the kind of line in the sand where maybe you lighten up a little bit, maybe you put a stop loss in. Again, I'm not telling anybody what to do. I'm just walking through trade management, and that's what professional traders do. Now, whether you're trading full-time or not, trading for a living or not, I don't care. If you have money in the market, you have to at least act like a professional And acting like a professional means that you are prepared. That's all that means. Don't let the name or the word, the terminology make you all bugged out and that kind of stuff. It doesn't matter. Being a professional means you're prepared. So everything I'm talking about right now, and we're going to start here with the SPY, setting up trade scenarios so that after the market opens, so if we go back into the game, after the market opens and your game starts, you're going to sit there as cool as a cucumber because you did all of the hard work before the game started, before the market opened. Traders that have a problem and say, oh my gosh, the market's so stressful. Oh my gosh, I can't follow the plan. Oh my gosh, everything's moving. You didn't plan it. You didn't plan. You didn't go into the day saying, this is all I'm going to do. I don't care about anything else in the market. Very few people you will ever meet will be able to trade stocks, options, futures, Forex, and crypto all at the same time and all successfully. Pick something. Be damn good at something. For me, I'm really good at equities. It's my niche. It's what I do. I've been doing it since 2000. So what we're going to do now is we're going to go over trade expectations first in the market, and then we're going to see how that plays out into the market for the next day for the 25 stocks that are going to be in the Prop Trader Challenge. So basically what's going on right now, SPY is really having a hard time getting out of this 288 to 292 window. We got below it for a couple of days, got above it basically for 2 days. Here's the way I'm looking at this, and if we were in my office in New York City and we were trading, I would basically have a box around this right now as my trade expectation and say right now that is the right price for the SPY. Until we can get around that, I am going to be in cash flow mode as far as the SPY is concerned. So remember, this is order flow. Cash flow is what's going on most recently. Best trades, period, are when the long term and the short term are in the same direction, which then that will give you a lot of opportunity intraday to be aggressive when you're trading in that direction. But since that's not going on right now and we're kind of just trading sideways and we're in this little box, I want to make it clear my perspective and my trade expectation in the SPY is cash flow mode, short-term trades until it gets out of this box convincingly. No other way to put it. Now, the Dow Jones is a little bit different story. It's been pretty strong. Same exact scenario, but this is kind of exactly what we're looking to see happen in the SPY right now. Now, the reason I look at the SPY, and a lot of traders who have been trading for a while look at the SPY instead of the Dow or the diamonds, whichever one you want to call it, whether it's the indices or the ETF as this looking at here. 30 stocks versus 500. 30 stocks can have 2 stocks having a really, really good day or really, really bad day and influence the entire thing to make it look like it's really strong or really weak. So most of the traders that I know follow the S&P 500 and then kind of use other ETFs or other indices as secondary indicators. But you can see from a relative strength perspective, the diamonds, the Dow Jones actually broke out of the box, and that's exactly what you want to see. You want to see if it gets out of the box, you want to see a giant energy candlestick and then follow through. So we got 1, 2, 3, 4 days in a row of what I call well bid. So really clean breakout in the diamonds, which is what we're looking to see possibly happen in the SPY. If it does, awesome, great. That'll change our trade expectation. Now, what's trade expectation? Trade expectation means how much you expect follow through. And then that follow through expectation is going to dictate your trade management. So if I say trade management, if I say trade expectation, that simply means are you trading with order flow and short-term momentum, or only one or the other? So long-term order flow, you can hold a little bit longer. Short-term is a cash flow type trade where you do not build a position. So it's interesting now in the diamonds, we actually filled the gap today. So I'd be looking tomorrow is stocks in the Dow, which ones would be strong, and especially which ones were strong today, kind of like any of these stocks that were strong on a day that the market closed weak, especially the Dow. You would look to be bidding for those stocks for tomorrow's Prop Trader Challenge because they were already strong when the market was weak, and specifically the diamonds here, right? So we're going to jump over to the Qs now, and Qs, you should be able to tell immediately what I think of the Qs right now. Again, a mess. Now, when I say a mess, I don't mean a mess that it's untradeable. What I mean is it's a mess from the perspective that you cannot look at this from a short-term perspective. Now, obviously, long-term, going back to May, very strong, right? Very clear that the order flow is bullish. But we basically have 2.5 weeks here where we keep flip-flopping back and forth. And probably some of that's from Apple, which can't pick a direction right now. We'll get into that in a second, and my call on Apple this morning. But from what we're just talking about now, long-term picture clearly bullish. Last 3 weeks, choppy in a trading range. So trade expectation for follow-through is lower right now until the Qs get out of this box the same way that the diamonds did, just to give everybody a clear picture of that again. So what that translates is any NASDAQ stocks that you're trading, or if you're trading the Qs themselves, you would not be aggressive with share size. You would not be aggressive with how long you hold it. You'd be putting the trade on, fine-tuning your entry. As soon as you see it slow down, you get out. And that would be the game plan until it gets out of this box. Now, to take that even a step further, if it goes to the upside like the Dow did in the direction of the longer-term order flow, that changes. Now you go to order flow trade management, which means hold a little bit longer, maybe more positions, maybe more shares, but you have to add something really crucial to that. You actually have resistance here. It got up to this level once, twice, 3 times. It hasn't been able to get through there. So essentially, it looks like it's having a hard time getting above 186. Now, this is actually a pretty cool trading lesson that actually happened a couple of times here, where you could see that you would normally, somebody would say, okay, use the high of that candle, use the high of that candle, use the high of that candle. That's BS. This is the real number it's having a hard time getting above. Until it got above that level and stayed there, it didn't matter. Got above it, came back in, got above it one day, came back in, tested it again, finally kind of petered around there, but at least it stayed above that level. Same thing is happening over here. Even if we break out to the upside tomorrow, 186 is a level that has to get through. So if we push up from 180, let's call it 184 to 186, expectation for follow-through is lower. So you have good trading if it breaks to the upside until 186, better trading above that because it has more room to go. That's how you set up trades. Every single day you go into the market, you go into battle stocks every day, and you say, okay, I know how long I'm going to hold. I know which ones I want to be long, which ones I want to be short, and how aggressive I'm going to be in them with share size. One last one, we're going to take a look at the Russell. Russell, again, you should be screaming to you right now. Clearly also in a box, which was kind of interesting because it broke out here and looked like it was going to take off, and just absolutely did not. So the Russell is, again, kind of stuck between 170 and 173. So what does that tell you as a trader? If you are getting chopped up right now, if you are being aggressive with how long you hold trades, if you are being, and I'll use air quotes, if you're being disciplined and you keep getting stopped out, you must adjust. I sound like Johnny Cochran there. You must adjust your trade management to what's available. And if you're trading the IWM, or if you're trading some small cap stocks that make up the IWM, you must trade for cash flow because the big picture right now is not clear. And to make it even more not clear, but to drive the message home and make the message really crystal clear, remember what we said about these types of candles with the smaller body? They're all over the place here, right? This is what tape reading is. This is where professional trading really, really becomes, you know what you're doing. Not only is the IWM stuck in this box between 170 and 173, but look at the kind of candles inside the box. Melted candle, melted candle, melted candle, melted, 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 melted. You get the idea, right? What is melted candle? Indecision. So you have a lot of indecision on the individual candlesticks on top of the fact that it's stuck in this $3 range. So what does that tell you? That tells you to expect a choppy market. Individual stocks are a different story, which we're going to get into next. But from a market perspective, it is not clear a break to the downside in any of these major indices is against the longer-term trend. And I'm going to pull up a trade in Apple that perfectly illustrates this, which means that if you short sell a stronger stock, it's going to be very hard to make money short selling a stronger stock, even if it appears like it's breaking down. But what's interesting here is 1, 2, 3, 4, 5, 6, 7 times it tried to break down and kind of got pulled right back to that 170 level. And then you have Apple, which did exactly the same thing and put it in the blog today about it looked like it was ready to roll over, actually got through there and bounced back. So this is a great illustration of if a stock is stuck in a box, let it get out of that box before you have an opinion, especially if it's against the order flow. If it breaks out to the upside, a much, much different trade. So I hope that helps you set up the trade expectation coming into the day just from the market. So if we had to put a ball of yarn, I don't know what I'm saying right now, if we had to wrap that up in a ball and say what's going on in the market is choppy, there's indecision, and you should be trading for cash flow unless the market breaks out of the levels that it's stuck in right now. Kind of the same thing that the Dow actually did. But what's going to be interesting now is to see if it actually holds this short-term trend and gets another leg higher. So what we're going to do now is we're going to set up some trades. If you guys have any questions, absolutely type them into the chat. I'll be more than happy to answer either individual questions or any questions in reference to any trades that you happen to be in. Obviously, I can't tell you exactly what to do. That wouldn't be right. But I can tell you what I would do based on my strategy. So if you have any questions or stocks you want to take a look at, I'm going to review the 25 for tomorrow's prop trader challenge, which, by the way, starts right after the market opens. So you want to get into the game tomorrow around 9 o'clock at the latest, get those picks in, and then get your name in the game. No other way. I'm just a rhyming machine today. All right, so Apple, as we said, we were looking for it to break down, and actually this is a big lesson on the blog this morning that we said that this is really what tape reading is about. If it breaks down, you don't want to be the first person pulling the short out there. Let it prove itself a little bit, and if we actually jump down to a lower time frame, you can actually see here right out of the gate, within that first 15-minute candle, it failed. And what's kind of cool here is if you actually, if you happen to be one of our students, you would know this setup where we talk about the opening price breakout, and that's the actual opening price. This candle right here is the opening 15-minute window. Generally speaking, if you're not looking to trade the first 15 minutes or so, or maybe in the first half hour, the opening 15-minute candle is a really good barometer, a really good way to measure today's order flow and wait for a breakout above or below. So you see we got this move in Apple right out of the gate, right below, but bounced right back in, and we never traded below that level again the rest of the day. So that is good game planning. If you come into the day saying, here's the longer-term support level that Apple looks like it's going to crack down below, and does immediately, but then never trades back below there, you would not have been caught short as the stock bounced, and you probably wouldn't have been in the trade at all. So as far as Apple heading into tomorrow's trading, I'm very neutral on Apple. The one thing that's interesting about Apple is we got what is called a bullish U-turn, where today's price action traded below yesterday's price. So you can see here's yesterday's low and today. So we traded below yesterday's price, bounced back up, and trapped a lot of traders that shorted the support. But if you follow the blog, you know exactly what we said. Don't be aggressive until it gets through there. It would be the first sign of potentially reversing. And if you did, as we said today, it would have been a lot less shares, a lot less aggressively, because the picture was long-term bullish, short-term potential change of trend. And that's how you manage your trade. So again, I'm going to say it over and over again so that when you get in there and start making your picks for the game, or if you get in there and you do what you're supposed to based on what's going on the charts. All right, so Apple, very neutral. I'm not really going to be looking at anything, especially because there's resistance here at 222, which is pretty interesting there, right? So even if it opens higher tomorrow, we got 1, 2, 3 days where it couldn't get above there, and the last two it couldn't approach it either. Not to say it can't bounce tomorrow, lower expectation for follow-through. Next, we're looking at Amgen, a little bit longer-term picture. We actually had a really good fuel candlestick here, broke through. Tried to get back in here for 2 days, but then immediately got back above. Now we have 1, 2, 3, 4, 5 days in a row where Amgen is actually what we call well bid. And what's interesting about Amgen being well bid, I'm going to throw another term at you that we have in the program, which is called saturation points. And ultimately, Amgen is now the 5th day in a row where it's strong. Now, strong means higher highs, higher lows. That means that tomorrow, if Amgen opens higher and pushes higher, I'd be more inclined to be taking profits. So if I was long Amgen tomorrow, which is the right play, being long Amgen tomorrow above yesterday's high. But again, if you're playing the game, you got to get in there before the market opens and you get that first print. If you get a good morning out of Amgen, because the stock is well bid 5 days in a row, that would be a signal to be looking to book profits. So that would be, again, trade management taking it a step deeper. We went over order flow. We went over cash flow. Now we're adding saturation points to tell you to actually manage the position differently if you get a higher open and a push higher and expect the stock to show profit taking. So interesting setup there. Definitely a long. Definitely be looking to book those profits on a push higher in the morning. Amazon, unbelievably similar to Apple. The one thing that is a little bit more defined in the Amazon move, even though, again, we failed here to push through. Another good example, long-term order flow, short-term bearish move. We're actually seeing lower lows and lower highs. So Amazon actually is pushing lower, but it is incredibly hard, other than short-term day trade cash flow right now, to trade this stock on the short side aggressively. The one thing that is interesting, and we'll get into this because taking a look deeper into the charts, which we call tape reading, look at how much more, if we just go from here over, look at the size and the color of the bearish candles compared to only one green bullish candle. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 candles, and really only one clear green bullish energy candlestick. When you start to read between the lines, this is kind of like looking under the hood of your car. You start to see stuff that you don't necessarily see by just listening for it. So it's going to be interesting to see if Amazon opens tomorrow higher into this 1960 resistance level and finds some sellers again, which would be at this high from a couple of days ago. That would actually be the way it set it up, 1957.31. So Amazon tomorrow morning, I like it long, 34 to 57. So you do have about $20 there, and that's the beauty of playing the game. You could be in there just for the morning, get out. The game is over at 11:30 in the morning. If you get a good opening tomorrow, a good print, and a good push up, you could be looking at some nice profits just on the opening game. So I do like Amazon long, but again, if you're trading the stock, I would only be looking to trade cash flow because the short-term move is against the long-term order flow. Cash flow means you don't look to be aggressive. Next, we're looking at Broadcom, sticking with the tech stocks. Actually, Broadcom is interesting because we were looking for it to fill the gap over here. We actually called a couple of weeks ago that this was a short covering rally, which is quick. And the only way that you know that is if it fails to make new lows and hold. So we actually do have a pretty clean move to the upside in Broadcom. And let's go over the charts again. Well bid, higher highs and higher lows from this one. So we got 1, 2, 3, 4, 5 well bid candles in a row here in Broadcom. So what does that mean? Let's look at the pitch. Actually, this is a really good illustration here of how to manage your trades. Broadcom, absolutely long, right? How much room is there to go, though? This is a big resistance here at 252. So even if the stock opens higher today, which is the right trade tomorrow, if it opens higher, pushes higher, hopefully that happens within the morning game and over by 11:30. But because 5 days in a row and because of resistance, you should be looking to be long this stock tomorrow and looking to book profits into that 252. So that's probably going to be a good trade in Broadcom tomorrow. But what's interesting, and from a trade management perspective, that is one of the places where more traders drive themselves batty and lose money for that simple reason. They don't look at the charts and say, what do I expect to have happen tomorrow and how much room is there to go? Absolutely expect it to bounce tomorrow, but don't expect it to follow through a lot. That's real tape reading. Next, we're going over to Boeing. BA, good example here again as well. Really good, clean move to the upside, hit resistance, and stopped. I do like the stock above 372.50 inside day. This is actually going to be an interesting one tomorrow. Most likely going to open lower tomorrow, so probably not a great short sale tomorrow. And because you're going to be playing the game, you'd have to get your pick in before the game. But here's how I'd be looking at Boeing tomorrow. I'm big on trading inside candle breakouts, both on the intraday timeframes and the higher timeframes. The fact that this closed near the lows, it makes it a little bit tricky because it's not a good short sale. I wouldn't short this because of the last, let's call it 2 weeks worth of buying. But the fact that it is right at this resistance level and stop there again, I kind of wish it closed near the highs and then we can get aggressive on a trade through 372 tomorrow. But because it traded low, this would probably not be one of the stocks I pick tomorrow, but it would definitely be one that would be interesting for those exact reasons. Again, reading the tape, if this closed strong, I'd be all over it, looking for it to pop through there, but it didn't, so I'm going to let that one go tomorrow. Next, we have Baidu, very, very clear in Baidu. Can you look at this stock right now? And I'm just going to take this out of here just so we can get a clear image. Can you look at the stock right now and say buyers and sellers are definitely in charge? No way. So if that answer comes back that clearly and that quickly, why in the world would you risk money on a trade where even the institutions don't have an idea of what to do in that stock? A lesson with nothing going on to do nothing. That's where you start to become profitable. Look at that stock, and I don't care if the stock goes up $10 tomorrow. If it does and you choose to trade it, cash flow trade at best will not be in my list tomorrow because institutions, 3 months now, let's call it maybe 8 weeks. 8 weeks of nothing. If the institutions don't have an opinion, I'm not going to have an opinion. I'm not allocating coins. I'm not allocating buying power. Next, we go over to Caterpillar. Caterpillar actually pretty interesting here. Again, good long-term chart analysis. Got up to this 158 level, having a hard time getting through there. Here's what's interesting about Caterpillar. We know 158 is the resistance level, and it closed, didn't quite fill the gap. This is how I'd be looking to trade Caterpillar. Now, again, remember we looked before at the chart that had all of those melted candles, and it was, I think it was the IWM, and we said it's a mess. All these ridiculously ugly candles that look like a whole bunch of these. But look at how different this is on the breakout. Caterpillar, I would have said nothing, and if you go to the blog, I'm sure I did, right, for a while, until we finally get out of there, gap through, hold for 3 days, and have some more bullish price action. So look at this. Even before the breakout, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 11 out of 12 days it closed above the open. That is a obvious bias from institutions. That is a commitment in real money from institutions. So if you go down on that intraday time frame, you are now looking for your short-term move in the direction of the higher time frame. Now, what becomes interesting here in Caterpillar is the fact that, let me zoom this out, we actually are looking to fill the gap. So this is kind of an advanced trade. We know 158 is the resistance. If I'm game planning the stock tomorrow, I am literally going into tomorrow saying, oh my, I hope this stock opens lower, pushes down, finds a bottom on the 15-minute chart, maybe the hourly chart, and then I'd look to trade 152 to 158 for maybe a 2-day trade. So that's actually a pretty advanced situation there as well. I just said, I hope a bullish stock opens lower, giving me a good opportunity to bid for the stock. Now, you might be like, why? Why would you want the stock to go down? And I'll tell you why. Because if I know 158 is the resistance level, I want to increase the distance between where I get in and my potential profit, as opposed to it opening higher, closing that gap, and having very little profit potential. So a strong stock opening lower, looking for it to bottom, and then looking for it to ultimately get up to that 158. So that's kind of an advanced lesson as well. You want the distance between your profit target and your potential entry to be wide enough to justify accepting risk. And right now, the 158 level is the level it's having a hard time getting over. Really good, strong, bullish price action over the last, actually the entire month of September, if you really look at it, right? This is the beginning of September. So the lower opening there would be what I'd be looking for and looking to bid. CVX, we're actually seeing a short covering rally. We've been talking about this. Is actually in one of our live broadcasts. I believe it was from the 12th, which is probably over here. One of the, I think it was this one here, yeah, the 12th. Saw this downturn. We said if it bounces hard, it's going to be short covering rally. So what are you doing now? You basically have from the middle of July to the middle of September selling, and now you have 5 days worth of buying. So long-term bearish order flow, and long-term is obviously relative, about 6 weeks of bearish order flow, 5 days of bullish momentum. If you decide to trade CVX long tomorrow, which looks like the right trade, well bid, well bid, well bid, inside candle, breakout gap to the upside, I'd be looking to bid CVX long tomorrow. Fully understanding, though, that we have 1, 2, 3, 4, 5 out of the last 6 days well bid, pushing higher, I'd be looking to play this in the morning only and then looking to be booking some profits there. Taking a look at John Deere, I don't see a lot going on here. We did push down. We held the 150 level. I don't like, see, this is what I don't like when you start to look. I get a lot of people asking me, how do you know which stock to trade? Sometimes on the charts, you can just tell that stocks are not in play just based on how ugly and how much indecision there is. So you can see when a stock is really obvious. You see a lot of this type of price action. When a stock is not obvious, you're really drilling down to those intraday or one day to the next type of time frames. And let me tell you, it is much easier when a stock is obvious over a 3 to 6 month period, which basically means from one earnings season to the next is staying good and the buyers or sellers are remaining in the stock. I don't see a lot going on here that's that obvious in Deere right now. So this would not be one of those stocks I'd be looking at. So if I was looking at this and we're trading in the office together, I would say I don't see anything. I'm not touching it. Stay away. Facebook, we actually had a pretty nice call a couple of weeks ago. We basically said, let it tip its hand, probably going to break to the downside. Had a good short here, had another one. And now, again, hopefully you can see me by now, Facebook is stuck between 160, 168. Some interesting news came out of Facebook today about their dating app or their dating, whatever it is that's coming out now. Supposed to be a big competition for whatever's out there. So that might be some bullish news to see this 160 level hold, get above the 167.50, and then get back up there. So if Facebook has a strong opening tomorrow, and again, I know you got to get your picks into the game before the market opens, I would not be doing anything coming into tomorrow with Facebook in the game because it's not obvious. But if I personally was trading and saw it get above the 167.50, I would start to take a look at it. Next, we have Goldman Sachs. Absolutely nothing going on here. I am not touching Goldman Sachs in the game or in real life. Next, we have Home Depot, which we spent a lot of time before talking about cash flow, order flow, and how those are both dictated and influence your trade management. If Home Depot opens flat tomorrow and holds this 208, 212 is the level on the other side. Not the best trade on the planet because it's basically sideways, and we'd be looking at a break through that level. However, 208 is an obvious level. Once, twice, 3, 4, 5 times now it held the 208 level. I'd be looking to bid 208 tomorrow or somewhere in that area, looking for it to retrace back up to 212 for a $4 move over a couple of days, maybe even a day and a half. But as far as playing it in the prop traded challenge tomorrow, I probably would not. I don't see well bid like this. I don't see a strong close, and I don't want to short sell the stock because of how strong it's been since mid-August. So I'd be laying off a Home Depot as well tomorrow. Next, we have IBM. Nice breakout above the 147 level. What I don't like is these tails again. You're starting to see all these tails. I know it closed down with the rest of the market. It's kind of strong. Not one that I'd be looking to jump in tomorrow either. Next, take a look at JP Morgan. Again, another false breakout with the rest of the market. We actually had this coming up over here where we said, finally take a look. Looks like it's going to finally bust through the 118 level. Actually did, suckered everybody in, and now taking a stop loss on that trade. This is actually not a bad scenario to be looking to bid the stock tomorrow and get long because you had a really good solid momentum push through long-term resistance. The market punched through. The market came back. The stock came back. So 2 days lower in a strong stock taking out really significant resistance levels. I would actually not have a problem bidding for this. However, let's go back to what we said about cash flow versus order flow. This is absolutely a cash flow trade. If you get into, let's say, 5 different trades tomorrow and you have the choice to allocate your buying power, this would not be one that I would have a lot of buying power allocated to, maybe 10 or 15% of the entire $1 million in coins that you get. Not the best trade on the planet. All I'm thinking of is tomorrow between 9:30 and 11:30 in the morning. You could conceivably have the stock open flat tomorrow and find some nice buyers and resume that move to the upside. So again, put it in perspective where the trade call out is coming from. Micron has been bearish even with earnings coming out. The one thing I do like, you can see here, hopefully you're starting to train your eye a little bit now, starting to close above the open. Even though long-term downtrend, look at the difference with how it's closing above the open. I would not be looking to be long the stock regardless of what it does tomorrow. I would probably stay away from the stock. If the stock was exhibiting well offered, kind of like over here where you start to see lower lows, lower highs, I'd be looking to short sell that tomorrow, but it's not, so I wouldn't be doing anything. Netflix, very interesting, having a really hard time getting above this 370 level. From a game perspective where you have to have your picks in before the game, I would not be doing anything in Netflix tomorrow. From a trading perspective, I'd want to see it close on the daily chart above 375, and then the gap fill will be up here at 395 area. So you got some room there from a trading perspective. Next, we have NVIDIA, bullish U-turn. Remember what bullish U-turn is? We traded lower, it came back up, suckered all those people into the shorts that are only trading for cash flow, these most recent trades. Would not shock me if NVIDIA bounced, but again, learn how to read the tape, put it in a little bigger perspective. Pretty big resistance here at 267.50 multiple times that this number has been significant. So where's it going to go? If it opens higher, it's going to open higher right into resistance. So long-term picture, I don't like NVIDIA at all right now. I know over the last couple of years it's been a beast. Right now, game tomorrow, 9:30 to 11:30. I don't see it. Let's see, Roku. Oh, very different perspective here in Roku. What's going on in Roku compared to the rest of the market? The market pulled back, right? Gap pulled back and almost touched resistance. Roku didn't do that. Not only did Roku not pull back, it actually closed strong. I would absolutely be getting involved in Roku tomorrow. So when you make your picks tomorrow, that's the crypto game I played going on while we're playing. So next we are going to be looking at Square. Not much going on here. We did get a bullish U-turn that kind of reversed there for a minute. Nope, I'm not going to do anything because you can really make a case here that it's a longer-term uptrend, but it broke the uptrend. So you're basically looking at a potential change of trend to the downside, which is not something I like to be the first person at. So it's not a great long anymore because of how deep it pulled back, and it's not a short sale yet, especially because you had an inside candle, should have broke down, didn't. You did have a down candle that traded down and bounced right back. So not a great long anymore and not a short sale. So I'd stay away from Square as well. Next, we're looking at Tesla. The one thing I do like about Tesla, which might not be able to take advantage of getting your picks in tomorrow, consolidation, two melted candles. This will probably explode tomorrow coming out of these 2 days of consolidation. We'll get a pop. If you want to take a gander and guess direction and put it into your list tomorrow, that's all it would be, because consolidating, still downtrend, basically since mid-August, not much to do there other than paying attention to the fact that there were multiple, not inside days, but certainly 2 days of consolidation. Something else to consider here, just a tape reading perspective, once, twice, 3, 4, 5, 6 times it tried to get above this 300 level and could not. So that would be really an interesting one to look to as a day trader tomorrow from a cash flow perspective. I don't have a longer-term perspective of it, but I do keep paying attention. That's 300 is a big level. I would trade around that level tomorrow in real-world trading. Twitter broke down. We actually had the call out here from this 5 days worth of consolidation, 35, 36. Pulled back, hit our support really in just basically two and a half quick days. Now we're below 31. Very tough to short sell a really liquid stock like this unless there's a lot of problems, and there's really not a lot of problems other than all the spewing hate that comes out of it. But that's the president. That's another story. We're not going to get into politics here. As far as Twitter is concerned, I'm not really loving it from the long at all. You can clearly see why. Where is the bullish bias? There is zero bullish bias. The one thing that's interesting is the market kind of had a neutral day, but the stock actually kind of recovered. If I was forced to make a trade in the stock tomorrow, it's well offered. I'd be looking to be short, but that's the point. I don't love it either way, so I wouldn't be doing anything. Good example here of a stock having a problem at a level, 268 is the level here in UNH, having a hard time getting above that level. Push back. Man, that's a tough one. I'd probably do nothing in UNH tomorrow. Walmart, last one. Actually, two more, Walmart and then Exxon. Walmart actually doing nothing. You can clearly see here now. Hopefully your eyes are trained. 97 to basically 94, stuck in a $3 range. And if you can't see that clearly, I will help you because this is really important to start noticing this during market hours and more specifically after market hours. As far as I'm concerned, if we're trading in an office right now, I would tell you, wake me up when it breaks 94. Wake me up when it breaks 97. Until then, nothing to do for me. Next, we have the very last one, ExxonMobil. So what we're going to do now is a little sector rotation, CVX. Ooh. Helps if I could spell, right? CVX. CBX bouncing, right? Not quite bullish, but money into the sector. That's what you're paying attention to. Combine that with ExxonMobil, money flowing into the sector, more than one stock doing the same thing. Exxon bouncing, not at a saturation point because you had a couple of days worth of consolidation here. I like Exxon long tomorrow. Again, we're talking for the first 2 hours of the day tomorrow. Pulled back off the open, almost 50 cents. I would be looking to be long Exxon tomorrow. So those are the stocks for tomorrow. Market itself, cash flow mode, plenty of individual stocks, mostly to the long side. Any shorts would be cash flow only unless those stocks are already pointing to the downside. So what we're going to do, we're going to wrap it up. I'll give everybody a couple of seconds. We'll count it down. If you have any questions, any stock you'd like to have a quick look at, type them in now or forever watch the replay. Again, tomorrow's game is the Prop Trader Challenge. You would get in there and get your picks in. You'll see it on the dashboard tomorrow. You'd go in here and see Prop Trader Challenge. These are the prizes. All you need to do is finish in the money. You will be put into the sweepstakes. Once that sweepstakes get picked, these will be the prizes for tomorrow. So we're going to call it a night. I hope everybody had a good time, found this worth it. We actually got a lot of lessons out of tonight, which was kind of cool, and most specifically, trade management. That is by far the biggest thing to learn. Understanding how to manage a trade before you put the trade on makes trading a million times easier. Also, never fighting the order flow. If you do, recognize that you are trading with cash flow only. Cash flow only should dictate how you manage that position, which means book profits, don't size up, and don't build a position. I am signing off. Have an awesome night, everybody. Thank you, guys. I really appreciate it. Hey, Mark, how's it going, man? Great to see you. If you guys have any questions, please absolutely shoot me an email. I would love to hear from you. Get in that game tomorrow. It's free. All you got to do is sign up. Have a great night, everybody. Appreciate you coming tonight.